Tracy Durfelt is an insurance expert who runs the nationwide Contractors Alliance and also Wise Insure. Tracy joins us today to talk about some very serious topics on the insurance front. These are topics that, even after 10 years in building, I myself did not fully understand. And unfortunately, in our completely litigious society today, if you don't have good insurance, the consequences can be dire. And truth be told, we all work too hard for our families and our clients to let silly things that just lie in the fine print put it all at risk. So that's why this topic is so vitally important. And I'm confident that everyone is going to learn at least one important thing. Okay, so that was actually my next question. I wanted to get into some of the prior work exclusions, but I think you just hit on the most common. Are there any others that are coming to mind that you want to point out?
Oh, goodness, yes. When we look at per claim versus per occurrence deductible, for example, many builders don't understand that difference, and maybe their agents don't either. But when you have 32 homes in a development and you have one event, your deductible times 32 is different than your deductible. It can have tremendous impact on the claim settlement. So that's one thing to watch out for. Other exclusions, you've heard me mention subsidence or earth movement. That's not just about earthquakes. That can be underground water causing the sinkhole or the hill slide by the creek, or simply settling of the home given expansive soils. That exclusion is at a minimum a $35,000 expense for a minor type of claim of that nature for the builder on just one home. And if you have a whole subdivision that is affected by what could be construed as earth movement, that's an issue. Let's keep in mind that there's plenty of litigation out there that suggests no matter what the cause of the earth movement, for example, water could cause the earth to move. One could argue that, hey, it was water that caused the earth movement, therefore its water is not excluded. That's not true. Anytime the word earth movement is used in the sequence of events, you may have a denied claim if you have that kind of exclusion. It's a biggie. Many builders need to just find that one as unacceptable. Another exclusion or limitation involves your subs. Many carriers will penalize you at the time of claim or audit for having an uninsured or an underinsured sub. Uninsured sub is self-explanatory, and many claims are both denied or subject to a higher deductible, or you're dealing with a very expensive audit rate on an uninsured sub. Let me define underinsured sub. And that's when the limits aren't meeting the policy's requirements of the builder. Many policies out there do require the trades to carry limits equal to or greater than that of the builder. That's a difficult exclusion. We already know that builders are challenged by tracking the policies that the trade partners have, but the additional restriction on and underinsured in the event of claim makes that even more important, or you simply should not accept that exclusion. The injury to a subcontractor's employee on the job site is a big one, especially if you're in a state where work comp is optional, as is your home state of Texas. But even if you're not in a state like that, we call these action over claims in many situations, and those can be catastrophic. We had a client whose electrician fell off a ladder and was paralyzed for life. Fortunately, that was somebody who had a claims ready file, and the electrician's policy did not have the action over exclusion, neither did the builders. And so there was adequate coverage for that situation. But that type of limitation or exclusion is something to look for and certainly to watch out for. There can be other relevant exclusions depending on the type of construction that you perform. In the insurance industry, we look at remodeling, custom homes, tract, townhome, and condo, all very differently. And I also feel that the insurance industry doesn't necessarily define them the same way you would as a builder, making it even more difficult. When you have a residential limitation or exclusion, pay careful attention to that, because the insurer may misunderstand what you're doing as something that would otherwise be excluded. A great example are single family homes as compared to zero lot line townhomes. Both could be construed as the same, or the carrier could simply exclude the townhomes regardless because they have a townhome condominium exclusion. These types of exclusions based on a type of work are very, very important to pay attention to. We see that both in the trades policies, but notably some builders' policies will only let you build so many homes, or only certain kinds of homes, or exclude most of what you already do, and yet it provided limits for the certificate, but at the time of claim may be disappointing. It's a pretty thorough list. I'm sure there's more. Oh, there is one big one. There's a couple. Sorry, there's so many, Jared. Professional liability, we touched on that. So if the builder is a custom builder and doing design build work, the plaintiff's allegation can be such that it's not the installation or the materials used that failed, it was the design. Well, that's a big exclusion. Or it could be that the weight load wasn't calculated correctly on the deck. Otherwise, it was built fine. But when it collapsed and killed a bunch of people, it was an engineering flaw. So that's a big exclusion. Again, the professional liability aspect. Another, though, the scarier one that's on the horizon is cyber smart home liability. When we look at our digital age, everybody that's buying a home these days is going to want something eventually that's smart, whether it be the TV, the entertainment center, or typically the security system or the thermostat. People want to control this stuff with their smartphone. They want to be able to look in on their kid, the baby monitor. And if you're involved in either retrofitting a home with smart devices, or you're selling a smart package as an upsell as a builder, there is no coverage for that. In the event somebody holds the homeowner's data hostage because the passwords weren't kept up to date, or the software patch wasn't downloaded, or the person who installed it went rogue and left a back door in and opened up the security systems for a break-in later. I mean, pretty scary stuff, but it's happening every day. Smart homes are attacked by bots or these software programs 3,800 times a day. And then the builder, their data is wide open right now too, though. All the general liability policies I've seen exclude data-related type of issues. So the builder may have a computer or a smartphone connected to the internet. If it's hacked, like today we learned about the Capital One data breach, you don't have to be Capital One or the city of Atlanta to be breached. It's happening to builders all the time. And some of the requirements in certain states are really onerous when consumer data is involved, and the builder has no coverage for the expenses of cleaning up the mess, the hardware that was affected that may never be recovered, the extortion of the Bitcoin in the event that the builder's data is held hostage. By our estimates, if a builder's figured out general liability and they've been claims free for 5 years and they know the formula, that's awesome. It's that builder that's going to be 3 times more likely to have a cyber or smart home related claim. And we aren't seeing the policies being sold, much less the exclusions are so huge you could drive a bus through them. So those are the major exclusion areas I feel could be looked at. The insurance carriers, I apologize for my industry, will always come up with new exclusions. So as of the date of the show, those are the big ones. But there's going to be more, and I can't see them coming until they happen.
Yeah, and